get an answer. Only for members and only from MarketClub.com. Hello investors, traders, and Market Club members everywhere. Adam Hewison here, president of INO.com and co-founder of Market Club with your market update for Thursday, the 20th of March. It's the first day of spring. It's good news for everybody. It's finally warming up a little bit here in the mid-Atlantic coast where we're based. But we're going to start off looking at the Dow. And this is one which is pretty interesting in our opinion, and I'll show you what I mean by that. Let's take a look at the chart itself. And as you can see, we have a red triangle right here, which is telling you the longer-term trend, according to our triangle technology, is down for this particular indice. Now, the other thing is, obviously, we've seen a rally here, but the key thing is you're just flirting along with this 50 line. If we close below that, it's going to be a negative sign. The other signal that would be negative, in my opinion, of course, is if this trade triangle here turns red, and it will turn red once it goes through this line right here, which is 16,046. So we go through this line here, then basically you want to be either out of this market completely or you want to be short this market. The other thing I want to share with you is this, and let's just clear the screen and go down just a little bit here, and that's on the MACD. The MACD's already turned down, indicating further weakness. So the two things you want to look at are obviously the green weekly trade triangle turning red, and the level I gave you was 16,046, and also the RSI going below and closing below 50. That would be another negative signal. That's what we're watching on the Dow. Looking at the NASDAQ, it's a little bit different picture here. The NASDAQ obviously has made new highs. Our trade triangles are positive, indicating the trend is high. That's why I'm saying we have a plus 85 here, whereas on the Dow it's a plus 65 or plus 60. It varies, and indicating that we are in a bullish trend in this market. So a little bit of a difference here, but we are concerned about the troubling trends we talked about in our report today, and that is the Ukraine and Crimea. We think that's far more serious than the administration's letting on. Also, the interest rates going up potentially within 6 months. That would be also very negative for the market. So watch the trade triangles and watch them carefully. On the S&P cash, this market has made a new high, but just barely. All of our trade triangles are positive, but I'd certainly want to watch this 1840 level. It's a key, and also the 50 level on the RSI. If we scope this down further, you can see that the MACD, or the MACD as it's called, is below the blue line, below the red line, indicating weakness. So I think you want to be very, very careful with just these indices just alone. But the Dow is the one that seems to be having the most problems. I wanted to share with you today copper. Copper is minus 100. Very big down day today, indicating that the trend continues down. Copper is usually considered an economic indicator, and if we just go to a monthly chart on copper, you can see it's been pretty much down for the last 3 months in a big way. And if we go further out, we'll do max, you can see it's been actually trending down since really July of 2011. So it's really been a downward spiral. This last leg really is not a good sign for this particular market. We're looking at the spot gold market, and as you can see, we've had a very nice run-up since the lows that were set in December of 2013, going all the way up to about the 1392 level, where resistance was seen around the 1400 level as the previous highs. We've had a $70 pullback, and the question is this enough? Is this just a pullback in a bull market? We believe it is. We think the longer term trend based on our trade triangles is positive for gold, and we expect to see this market go higher. So I'd like to see the market regroup here and then eventually get back in. Daily trade triangle, we trade on the weeklies and the dailies, is indicating you should be out of this market around the 1364 level, and we're looking for a place to get back in. So we pay close attention to the daily trade triangle turning green, and if that turns green and we have a weekly green still in place, then you want to re-enter this market from the long side. The comments from Janet Yellen, the new chairman of the Federal Reserve Board, pushed the euro down dramatically in the last 2 days, but however, we still think this market can go higher, as this was a 28-month low in the dollar against the euro. So I think we'll still see this market regroup and continue to go higher in favor of the euro against the dollar. The way you tell that is because it shows you the euro here is the lead month, or the lead currency, and that's the USD. So when the euro is going up, it shows you here, and when it's going down, it shows you right here the last couple of days. That's how you tell in currency pairs. Last market we're looking at is the crude oil market, and of course we've had a pullback, but the 98 level seems to be good support. We need to see the 50 level breached on the RSI on the upside, but we also need to see our weekly trade triangle turn green again. Right now it's red, indicating a trading range, which is 55, so I think we'll see this market chop around a little bit more, and depending on what happens in the Ukraine and of course other parts of the world, we may see this market just go sideways for a while, or we may see it resume its upward trend. But the longer term trend based on our trade triangles is positive, and we want to maintain that position. 100.33 is the longer term trend when it turned positive. So let's see what happens. But I'm Adam Hewison for Market Club. Hey, thanks for stopping by. Every success using Market Club, and be sure to ask us some questions in our Q&A section on the Market Club blog. Ask about any market and get an answer. Only for members and only from MarketClub.com.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.